It's Monday the 28th of April, you're watching Dukascopy TV, and it's time for the week ahead. I've Evan Lucas of IG on the line now. Evan, welcome, thanks for joining us. Let's begin. After a much expected rate hike from the RBNZ last week, Tuesday will see the release of New Zealand's trade balance data. With last month's figure at a record high, how important will this figure be for Kiwi Dollar performance? Or are we likely to see a cap on gains as this economy continues to play out as expected?
I think you're probably looking at more of a cap on gains, and the reason for it is you've got to have a look at how unbelievably strong over the last year the New Zealand dollar has finally gone, not just against the US dollar, but against most of its major peers. It does trade very, very strongly, particularly also against the Australian dollar, and that has been purely on the central bank differentials. They are very, very strong. The New Zealand and RBNZ is definitely probably the most hawkish bank in the G10, and I think that's probably more of a way of looking at it. It certainly had a bit of a pullback since that really expected number. It really did shoot up and then dropped away. It's also been a bit of a public holiday over on this side of the world. But in saying that, the trade balance itself is likely to continue to expand. They have seen really, really dominant performances, particularly to its major exporter in China, and that's been driving it quite strongly. So expectations are for it to actually rise a little bit further again to around about to $919 million US dollars. So that would be a good number, but I wouldn't expect it to have a huge impact on the Kiwi dollar, considering at the moment it's all about the central bank differentials and particularly the very hawkish stance that the RBNZ has.
We've heard in recent weeks that despite continued expectation that Japan will miss its inflation target this year, BOJ Governor Kuroda remains positive in his economic outlook for the country. Are we likely to receive emphasis on the use of government policy to reduce Japan's debt levels in Wednesday's monetary policy statement?
Unlikely. The monetary policy at the moment seems to be very, very sort of light on with regards to what you're currently seeing. Kuroda, yes, he is certainly positive on the economic outlook, and that is despite the fact that we did see the first downgrade to Japan around about 2 weeks ago by themselves. The interesting thing with regards to their inflation situation is that last week we saw a staggering number when you actually have a look at it, a 22-year jump at 2.7% for the whole core CPI. But that comes down to the fact that we did see their consumption tax jumping by 300 basis points. Now, the BOJ themselves, so if you strip that out, which is around about 170 basis points, it means that for the last 4 consecutive months that they've only seen inflation growth of 1%. So that is probably starting to maybe make his eyebrows sort of rise ever so slightly, and he will be sort of thinking about, even though the economic outlook looks strong, we certainly will probably see a peak in May. What happens post the sort of the filtering out of that consumption tax and where that goes? Japan's debt levels are obviously going to continue to expand, and if he cannot get inflation to move to the kind of levels that he wants, which is 2%, those debt levels may have to increase further again as they continue to expand their balance sheet and continue to expand their stimulus program from 60 to 70 trillion yen to maybe even higher than that, as they try to remain in that idea of getting out of deflation, which they've been in for the last 2 decades.
It's a big week for the US, with both the FOMC meeting on Wednesday as well as NFP jobs data due for release on Friday. With traders questioning the strength of the US dollar rebound, which of these releases could be the biggest game changer for the US currency?
Yeah, interesting times ahead with what's going on over in the US, and I think probably the FOMC is unlikely to have anything in there that you would really sort of say is going to be a massive changer. Yellen does speak obviously on sort of Thursday night for us over here in Australia. That will be very interesting, considering after what happened with her first and her immediate press conference on her first meeting, where she did quantify what a considerable period of time was, which was probably in hindsight a mistake. It is very unlikely that you're going to hear her say anything untoward or anything outside of what we already know, which is basically that the Fed's funds rate is unlikely to change to at least midway through next year at the earliest, and more likely towards the back end. So with that in mind, it's probably unlikely to be the FOMC that will really have any change on the US dollar. The non-farm payrolls, however, probably will. Everybody tends to load themselves up on that idea, and expectations are growing really quite strongly to see non-farm payrolls not only through that 200,000 jobs added, a sort of magical number, but actually quite well into it, current consensus number is expecting at around about 210,000 jobs added, with some major investment banks as high as 250 and even as high as 296,000 jobs added. So the expectations are growing. That is US dollar strength as we really start to see almost a wave of change in consumer sentiment, which is really coming through. But we're now seeing durable goods picking up. We're seeing housing data picking up. You're definitely seeing it through in the earnings season as well that's going on over in the US. All of that looks like you should be getting a good number from the non-farm payrolls on Friday, and that, I would believe, would probably see the best US dollar strength out of all the releases expected from the US this week.
Evan, thank you. That's all for now, but the Dukascopy TV team will be keeping you updated on these stories and more, so do stay tuned. Goodbye.